funsupermart.com.
Hello everyone. Last year, the performance of Asian equities was modest. Joining us today is Mr. Christopher Wong, Senior Investment Manager of the Asian Equities team at Aberdeen Asset Management, who shared with us his views. Hi Chris, thanks for joining us. The year of 2014 has just ended. What is your view on the overall performance of Asian equities in the past year?
Well, overall, it's been quite a decent year in light of a lot of issues that's happening in the region. There have been a few political events such as elections in India, Indonesia. Both have turned out to be better than expected. The Prime Minister Modi has had a very, very strong mandate in India, where he seems to be forming a majority government, and there's a lot of optimism in terms of the ability to deliver reforms in India. The other big political event will be in Indonesia, where reformist President Jokowi has seen that he's gotten appointment despite stiff competition from other candidates in Indonesia, and it has started some of its reforms in Indonesia by cutting subsidies and investing more in infrastructure. I guess on top of that, there has been also concerns such as a potential US interest rate hike in that market, and markets have been quite volatile in response to that. But all in all, it seems that there's better good news than bad news, and at the end of the day, the whole overall market has actually gone up by about 5%, which is a decent performance in light of all these issues.
In 2014, we have seen earnings downgrades in Asia ex-Japan. What do you think are the reasons behind?
There are a couple of reasons. I think the most important reason is just number one, the brokers' expectations has been too bullish, and they have continued the trend from the last few years that with easy money coming into Asia emerging markets, growth in terms of top line and bottom line will continue. The second part is in the real world. Second point is that the top line growth has actually been below expectations, and that's a reflection of more difficult operating environment across the region, where you have seen demand seems to be struggling, and that has actually affected top line growth. And the third and final point is probably cost increases, and in light of just high commodity prices, oil prices, which was high until quite recently, and also other costs like labor costs in certain parts of Asia, like China, for example, has meant that margins have been squeezed quite hard. So, in summary, 3 points that has actually affected the earnings downgrade. One is brokers, the over optimism in terms of numbers. Number two, the operating environment has been quite weak versus expectations. And thirdly, cost has been a continuous drag in terms of the bottom line.
With China's economic growth slowing to around 7%, is the investment case for China still valid?
Maybe longer term. I mean, the fact of the matter is the operating environment and the business environment in China is still undergoing transformation. The president of China, Xi Jinping, has continued to restructure the economy from an export-led economy to a more domestic-driven economy. And at the same time, he has been trying to reform the state-owned enterprises, and also try and eradicate corruption in the system itself. So all in all, despite all this negative news on, I wouldn't say it's negative news, but negative news for the stock market, but probably positive for the economy. 7% is a good number considering what China is going through at the moment.
In the year ahead, do you favor any countries in the region, and why?
We at the end of the day, we are bottom-up stock pickers, and in this particular volatile environment, it's very difficult to pick sectors and teams in terms of what will perform this particular year. The important thing for us at the end of the day will be more vigilant in terms of the companies we hold or the companies we want to buy, and just focus on those companies. We believe again that 2015 will be more critical in terms of stock selection than in the past few years, which were driven a lot by flows into the region, and whether it's inflows or outflows, but where there is quite a lot of unevenness in terms of policy making, stock selection is actually more key than ever.